much attention. Credit card debt just hit a record $1.2 trillion, and consumer spending actually surged in March. Patrick Mueller, RFC and president of Bella Advisors, is joining me now. Patrick, good to have you. So this looks like a mixed economic picture here. The economy contracted, but inflation has cooled. People are still racking up debt, but consumer confidence surveys show that Americans are worried about the economy. They're still spending. What's going on here?
Great to be with you again, Alicia. It's a little nutty. We've had a little bit of a pullback here on the GDP growth, and I think it's to be expected. We saw this last year. We had the Biden administration that changed the rules on what was a recession to make themselves look a whole lot better. So now we've got Trump that's in office 100 days now, and we're going to see more of this coming, I think, over the next 6 months before the ship really starts turning around. So we might see some negative GDP growth numbers. And, when it comes to the debt, that what scares me is consumer debt right now is an all-time high, like you were just talking about. And you have companies like DoorDash, where it's buy now, pay later, where people are taking debt on to order fast food. It's a little nutty. So it'll be interesting to see how this plays out moving forward. But I think long term, I think we're going to be just fine. Like you said, inflation numbers are starting to come down. Oil prices are starting to come down. So it'll take a few months before we start seeing more momentum when it comes to that. But I think it's going to be a little bit of pain in the short term, but in the long term, we're going to be looking really good.
Yeah, you're right. I mean, inflation has cooled again, but people are still worried it's going to increase because of the tariffs. But I was shocked to see that Americans are financing food deliveries, like DoorDash offering installment plans now. Meanwhile, credit card debt is exploding, a trend that took off really under Biden inflation and just keeps climbing. So, Patrick, when people are actually financing French fries, how do we take that seriously? Like, if you're broke, if you're hurting, why still splurge on luxuries like DoorDash and then finance it? Like, what's fueling this financial insanity?
Well, you can't fix stupid, right? So sometimes it's just easy money. And it's $82 billion last year that was buy now, pay later, whether you see it on Amazon or on DoorDash. And it's the trajectory of that is to be over $1 trillion here in the near future when it comes to that additional debt. So it's one of those things where it's like, is it, people are just not that smart in financing their food delivery, or are they just really that bad right now where inflation has taken such a hit where the price of everything has doubled over the last 4 years under the previous administration, and are people just really struggling, and we're not really seeing that being reflected right now in the economy.
Mm-hmm. Yeah. Well, I want you to react to what the president had to say today on Truth Social. He reacted to the GDP report and Wall Street today, saying that this is Biden's stock market, not his, reminding everyone that he didn't take over until January 20th, and he added, our country will boom, but we have to get rid of the Biden overhang. And then he went on to say this will take a while and has nothing to do with tariffs. Those will kick in soon, and companies are moving into the U.S. in record numbers. And he asks the American people to be patient, wait for the boom. So, Patrick, is this what happens before a boom, or is this a warning before a bust?
I think it's the necessary steps that need to be taken to correct what has been happening in the previous 4 years. And I think it's just going to take some time. I think for oil prices coming down, we're not really going to see that reflected in our pricing because that affects everything that people are consuming right now. And we're going to see that come down, but it's going to take 6 to 8 months or so before we really start seeing that being reflected. And as far as the tariffs go, I think it's going to be a great thing from a negotiation standpoint. It's being pro-USA, buying in the USA. And it's going to be fantastic, I think, for jobs coming back to the country. Ford giving people employee pricing and taking advantage of that right now. So I don't think it's going to be as big of a hit as people think. People are acting like it's a bad word, and it's not a bad word. What's bad is what all of these other countries have been doing to us for so many years, that if we want to send something to Europe, we pay a 50% tariff, and how is that okay when they can just send everything to us? So it's just trying to even the playing field, and I think long-term is going to be really good and start bringing more dollars back into the country. It's just, everything is so headline-driven right now. Somebody says something about tariffs and it causes our markets to go crazy, so we just have to think a little longer term.
Yeah, we're learning about these unfair trade deals now, but again, it's aimed at protecting U.S. industries, moving jobs back home, and sparking long-term growth. But the effects and the results of those tariffs remain to be unseen. I mean, it's anyone's guess right now. But thank you for your expert opinion, Patrick Mueller, RFC, and President of Bell Advisors. Appreciate it.